What's up, guys? Eric here from MajorLeagueTrading.com, and we have some afternoon markets on our hand. So there's a couple things to look at here kind of coming into today's action, and the first thing that I want to look at with this is just the morning write-up here. So again, this is my plan that I put out each and every day here, just kind of going through the things in which I'm seeing and, overall what I'm looking for, right? So we had a couple things here. The biggest piece being that we don't have any levels to work with up here, right? We're at new all-time highs for the markets as of last Friday here for the SPY and QQQ. So what I was looking at here was essentially just, talking through, what I'm looking at and just saying, okay, Friday was a massive move and a small gap up today, has the potential to send it hard to the upside, or if it fakes out, and then we slowly fade back into the gap and just trap a bunch of fresh longs on that move. My goal is, hey, I don't want to get trapped, and I don't think that will be the best trade on the board for the week either way. Meaning, I don't think that initial first run of the day, trying to run away from us is going to be the best thing on the day. But my main objective here is I don't want to get trapped, right? And that's exactly what ultimately ended up happening on the day. Is that, we did try and rally here and then failed and basically went sideways here for the rest of the day in terms of, the S&Ps, right? Now, if we go down here a little bit, further, you can see, here's the percentage change on the day. You can clearly see that Russell was the leader. And we're going to talk through a trade in which we took here in the Russell as well. And again, the Russell had been the weaker market lately. If you look, Russell's not at new all-time highs, right? So just from that pure standpoint, Russell's got a lot of room to move. So there was a target in here at 2004.50s. I wanted to pull back to 1953. I had some high hopes. I don't know what that is. I had some high hopes we'd get 1953s. But the main goal for the day was just to gather some data and slowly start to build that, strong and weak list. And then I also said an early morning divergence can be traded in either direction, but a failure to break out would be the preferred, meaning that trap of longs like we talked about, right? So we can get a bit of a pullback to set the lows here for the week if the market wants to keep running. That is that's still my same game plan, right? I think this move today was nothing more than just a trap for a number of people, whether that's the S&Ps, whether that's the NASDAQ here, and all of these things, right? So we have that across the board, except for, like I mentioned here, with the Russell. Now, I went ahead and marked just a couple of these purple levels are not real levels like what you guys see me talk about in the actual levels in which I teach. These are just, obviously, I marked the high of the day here, 1998.70s, which we've traded up through here in the after hours. But here's that big 2004.50 target. And I want to talk through the trade in which I took in here, and then also where we ultimately ended up having a divergence on the day with that indicator. And when I show you guys that, there is a link in the description below. If you want to get the divergence indicator, it is now available to you through the Trader Funding Challenge. So with that being said, I want to show just a little piece of the Discord here and kind of talk through something. So I wrote in the Discord, RTY likely trades 1977 80s here later in the afternoon. I went ahead and marked that level. That's this purple line right here. And then I said after that, if we can get some sort of trend flip, then afternoon longs are valid. And you can see this ultimately ends up being, earlier on in the day at about 11 o'clock right here is where that came from. And then, remember here was just commenting back about this after it occurred right down in here. You can see this was at 148. We came down and traded these lows at 128, so a little bit further over in here was the mention of this comment. And then just the, magic gift there. So anyways, just pointing out that that whole sequence of events of like what we talked about from last week was, hey, we've got this afternoon market thing that keeps happening. And I want to be able to play upon that here today, right? So we were able to ultimately, after 1977 80s traded, we rallied up, we pulled back. And then inside of this rally here, we were able to pick up longs in the RTY and close those out right into essentially the 4 o'clock cash bell. Obviously, futures trade 15 minutes after that. but closed those out right there. I thought we were going to push up and tag those 1998 70s there. So we sat through a little bit of a pullback there and then closed those right up into the 4 o'clock bell there. So overall, really, really nice. I'm not a huge fan of afternoon trading in general. It's not like my favorite thing in the world to do. But lately, that seems to be the thing to do. And I put that up on my Instagram story, right? So I'm being more aware of that as I'm watching current market action and starting to see that that was a thing. And it really was a thing back in like 2013, 2015. There were some like really, really good afternoon moves that ultimately ended up taking place. And if this market is shifting to that kind of situation where those are going to be cleaner, better, more readable type moves for us, then I just want to adapt to that. And so far over the past 2 weeks, that has been the case. And today ultimately ends up, proving to be the same thing here again with, a 20-point end of day rally, coming out of the Russell there. Now, in addition to that, I want to point out this divergence here that I talked about. So as you can see, S&Ps come down, make new lows. NASDAQ comes down, makes new lows. Dow comes down, makes new lows. Key thing here, all of them ultimately end up having a signal in place. That would be the green arrow here coming from the indicator. And then you can see that we had traded that 1977 80s that I was looking for. And ultimately the Russell here was not getting new lows on the day. So that in and of itself with the indicator, with the actual divergence in terms of price, all of those things, and the fact that we'd ultimately, come back to trade that 1977 80s that I was looking for, combination with the afternoon moves that I think we're, ultimately seeing here, led me to believe and go, okay, cool. Longs are now valid here into this afternoon move, and participated upon it in that way. So again, if you're interested in that indicator, it is available. I'll put a link in the description below. As of right now here, I'm going to be looking at this 2004.50 levels to ultimately trade here, probably in the overnight session or into tomorrow. And then from there, going back to the S&Ps or the overall markets and what I'm expecting here, I think we do have a little bit more of a pullback to occur. And then from there, much like what the morning write-up said here, is that, where it is, so early morning divergence, failure of the breakout would be preferred so we can get a bit of a pullback to set lows here for the week if the market wants to keep running, right? So I want us to pull back a little bit more here, ultimately establish those lows here for the week, probably Tuesday, maybe Wednesday, depending on what some of these earnings names do. And then from there, we can step back in and start to participate upon that. So anyways, that's what I got for tonight's free video. Take care. Hope it helps. And I will see you guys on the next one. Peace.